You're supposed to put the first 500 in the safe and lose the combination.
Yo, what is up everyone? It's your boy Cav. Welcome back to yet another exciting video. Today we're going to be looking at a very powerful candlestick pattern that I want to share with you guys. And the reason why I want to share with you guys this specific one is because I believe that it is the most powerful. The other ones are also powerful, but this is the most useful and very powerful out of all the other candlestick patterns that I've seen. And it is the bullish engulfing and bearish engulfing. So I'm just going to be quickly going through what bullish engulfing and bearish engulfing means and how you could actually use that into your trading, and what some of the things that a lot of people don't actually know about bullish engulfing and bearish engulfing. So in a bearish engulfing, what we have is actually two candles. We have two candles, a bearish candle and a bullish candle. So this would actually be our bullish candle and this would be our bearish candle. In this specific situation, we would have the market actually pushing to the upside. So we would have an uptrend where the market is making high highs and high lows, pushing all the way to the upside. And all of a sudden, you would actually have this bearish engulfing candle where a huge bearish candle, it could be a red candle, that actually engulfs this bullish candle right here. Engulfing simply means that it overpowers or it covers the other candle. So in this situation, we can clearly see that this candle completely covered this candle, implying that the market is actually trying to push to the downside. And the most important thing that a lot of people don't really see or understand about this specific pattern is that the market is actually breaking structure. So if we had a situation where the market was actually pushing up, making higher highs and higher lows, this would then mean that this is a break of structure. If we have a bearish engulfing candle, that would mean that we have a break of structure, and that implies that the market wants to push to the downside. It doesn't want to push to the upside anymore. It probably reached a very strong level at the top, and it can't push all the way to the upside anymore. And that's why price is now starting to melt down and pushing to the downside and starting to form lower lows and lower highs. And a bullish engulfing candle is the complete opposite of a bearish engulfing candle. So we would have a bearish candle that is completely engulfed by a bullish candle. So in this specific situation, we have a market where the price is actually pushing to the downside, making lower lows and lower highs, and all of a sudden we would actually see this huge bullish candle that engulfs our bearish candle, implying that price wants to start pushing to the upside. And this would then mean that we have a break of structure. When we have a break of structure, that means that price is violating its previous structure. Price is not following its previous trend anymore. So if it was in a downtrend, price is not in a downtrend anymore. It's starting to push to the upside, and it wants to start forming higher highs and higher lows. And this is the basic concept behind what bullish engulfing and bearish engulfing are. And I want us to look at a real chart and how to actually use this information. The most important thing is not necessarily to know the names of these patterns and where they come from and how they came to be, but the most important thing is to understand what these patterns are actually telling us. There's a very important thing that these patterns are actually trying to tell us, and that is simply a break of structure. When price is actually breaking structure, it tells you that there is a chance of a reversal. So price would then be reversing from a uptrend to a downtrend, and sometimes it would be telling you that it is reversing from a downtrend to an uptrend. So I want us to look at a real chart to identify these bullish engulfing and bearish engulfing patterns and what they actually tell us, and how to use that information when we are trading in a real chart. So when we look at US 100 right here, we have NASDAQ. I want us to look at the daily chart and try to identify some of our bullish and bearish engulfing candles and how you could actually use that information to benefit you in your trading. I want us to look at this specific example right here. Let me just highlight this so that you guys can see what's going on right here. We can clearly see that the market has been pushing to the upside, making high highs and high lows. This was a clear uptrend where the market was actually pushing to the upside. And we know that in an uptrend, you want to focus on buys, try to push with the market, because remember, you do not want to go against the market. When price is actually pushing to the upside, you want to push with the market to the upside. When price is pushing to the downside, you want to push with price to the downside. But I want us to look at these two candles right here. We have a red candle right here, and we also have a green candle right here. Now, this is not exactly a good example of a bullish engulfing candle, but I want us to use the specific example right here, because there is something very important that I want to show you guys. You can clearly see that the market has been pushing down, making lower lows and lower highs. So this movement right here, I know that it looks like a small move. This whole thing right here on a smaller time frame would actually be a downtrend. So the market has been pushing to the downside, but all of a sudden we saw this nice green candle pushing to the upside. When we look at that on a smaller time frame, it would look like something like this. Market making lower lows, lower highs, lower lows, lower highs, and pushing to the downside in a nice downtrend. And all of a sudden we see this green candle. Now, what this green candle means is that price has violated structure. Price is not in a downtrend anymore. We are not moving in a nice downtrend anymore because there's been a disturbance of this movement. A bullish engulfing and a bearish engulfing simply means that there has been a disturbance in the nice flow of a trend. So if price was actually moving in a nice downtrend, pushing to the downside, and all of a sudden we see this huge bullish engulfing candle, it simply means that that specific trend has been disturbed and there is a possible reversal of a trend. So price is not moving in a downtrend anymore. It wants to start pushing to the upside, which makes a lot of sense, because when we look at what's happening right here, we can clearly see that price is nicely confined in this trend right here, but all of a sudden this candle just pushed outside of this confinement. Price is not moving in this confinement anymore. It's pushing outside of this trend. So it simply means that it wants to start forming higher highs and higher lows and pushing all the way to the upside. And this would then be the time where we're going to be focusing on pushes to the upside and buying with the market and pushing all the way to the upside. So what we see right here is that the market has been moving low, making lower lows and lower highs, and all of a sudden we see this huge green candle, which implies that price was actually breaking out of its confinement. It was breaking out of its nice flow of a downtrend and trying to push all the way to the upside. I want us to look at an H1 and our chart to see what the market actually did right there. And as I have mentioned, price is actually moving in a nice downtrend. We can clearly see that price has been making lower lows and lower highs, pushing all the way to the downside. And all of a sudden we had this huge green candle. This movement right here represents that nice green candle that pushed all the way to the upside. I would have actually wanted to see the market pushing above this key level right here. So if price actually pushed above this key level right here, I would then consider this a strong indication that the market wants to start pushing all the way to the upside, because it would have broken structure and it would have been a very valid signal that we should start looking for buys. But we can clearly see that the market has been making lower lows and lower highs, and we had this huge green candle. Remember, a huge green candle that actually implied that the market wants to start pushing all the way to the upside. It started breaking structure and pushing all the way to the upside, and that would then be our signal to start looking for buys and not focus on sells anymore and push with the market all the way to the upside. So this would look like something like this. When I stretch this out like this, we can clearly see that the market actually broke outside of its confinement, and that's when it started pushing all the way to the upside because of that strong bullish engulfing candle that actually engulfed our bearish candle. I want us to look at another example and how we could have actually used this information to look for possible reversals and push with the market in a different direction. Let's look at something pretty recent on our 4-hour chart. What we see right here is that price actually started bouncing off of these levels right here. We have 1, 2, and our third touch, and price has been moving in a nice uptrend, pushing all the way to the upside, and all of a sudden we had this huge bearish engulfing candle. Remember, a bearish engulfing candle does not just appear out of nowhere. It usually signifies that price has reached a level where it just can't keep pushing anymore. It has reached a level, an area of value where we would either see a support level or a resistance level. In this specific example, we can clearly see that price has reached our resistance level, meaning that it is unable to push all the way to the upside anymore, and price is starting to reverse. Remember, a reversal or a bearish engulfing candle simply means that price can't push in that specific trend anymore. There is a slow in momentum and price wants to change direction. So if we had higher highs and higher lows pushing all the way to the upside, and all of a sudden we see this huge movement like this, that is a break of structure, and it signifies that price wants to start pushing all the way to the downside, and we shouldn't look for buys anymore because we have a violation of structure. Price is not in its confinement anymore, and it wants to start pushing in a different direction, and we should start preparing for movements in a different direction and possibly start looking for sells to push all the way to the downside. So when we look at what happened right here, I want us to highlight what happened right here. Let's hop onto a 5-minute chart. When we hop on a 5-minute chart, we can clearly see what the market has been doing right here. Price has been moving in an uptrend, as I have mentioned. We can clearly see that price was making higher highs and higher lows, pushing all the way to the upside, and it was moving towards our resistance level that actually touched multiple times right there. And all of a sudden we had our bearish engulfing candle, and what this bearish engulfing candle did was actually break our structure. We can clearly see that we had a very strong level right here, and price actually broke the structure. It was tampering with the structure with this level right here, and it was implying that price is not able to keep moving all the way to the upside or keep moving in its confinement, moving in a nice uptrend anymore. It wants to start reversing and pushing all the way to the downside, and that is clearly illustrated right here. We can see that price was moving nicely in an uptrend, and what we see from there on is a violation of structure, and price just started pushing all the way to the downside. When we move to a minute chart, this is when we would actually see that price was moving in a nice downtrend. I want to remove this. You can clearly see that price was actually moving in a nice downtrend, and we could have caught nice short positions right here and push with the market all the way to the downside to reach our 90% rule. And this is where you would actually hop out of the market. Price moved all the way to the downside, and this came as a result of us seeing a nice bearish candle that engulfed our bullish candle. And this is simply how you use this information. You don't necessarily have to know the meaning behind, understand what they actually tell you, understand what these candles are actually telling you. When you see a huge bearish candle engulfing a bullish candle, that in most cases signifies that price wants to reverse and wants to change direction. It doesn't want to push with the market to the upside anymore. It wants to start reversing to the downside, and that's when you should actually start preparing yourselves to push with the market all the way to the downside. And we can clearly see from this specific example that the market actually gave us a bearish engulfing candle. We started preparing for ourselves, and the market started pushing all the way to the downside, and we could have caught this nice sell right here simply from seeing the bearish engulfing candle. Just a quick recap of what we actually looked at. We have two scenarios where we actually have a bullish candle and a bearish candle, a bearish candle and a bullish candle. And what these mean is that price is actually changing in direction. So if price was actually moving to the upside in an uptrend, it would then start reversing and pushing all the way to the downside. And if price was actually moving all the way to the downside, and we see this huge candle right here, it means that price is actually starting to push all the way to the upside and it's changing in direction. And the reason for that is because price is actually breaking structure. So price broke structure right there, price broke structure right there. So we have a violation of structure. Once price starts violating its rule or its confinement rule to move in that specific trend, it means that it's going to start forming a new trend. So we can also see that price actually violated its rule right here. It violated structure. It wasn't moving in its original confined downtrend structure, and it started pushing all the way to the upside. That's when we'll actually start preparing for our buys, because the market is not moving in a downtrend anymore. We should start looking for reversals corrective moves rather, and start pushing with the market to the upside. And in this specific case, we would then look for our corrective moves and start pushing with the market all the way to the downside. I hope you guys actually gained a lot of value from this video, and you saw why I kept saying that the bullish engulfing and the bearish engulfing candlestick pattern is a very powerful pattern. And if you know how to correctly use this candlestick pattern, you can potentially make a lot of money from the markets, and it's really going to help you in your analysis and not making avoidable mistakes. I hope you guys enjoyed the video. If you did, please do make sure that you like, subscribe if you didn't, and stay tuned for more. Peace.
You're supposed to put the first 500 in the safe and lose the combination.